to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Hassan Miah, CEO of Paybby, to discuss digital banking for Brown and Black communities. It's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Happy to be here.
Let's start with the current environment and inequity in American wealth. Walk us through some of the demographics that contribute to the wealth and income problem.
Sure. So we have a long-standing problem in this country. For example, Black wealth is only 10% of white wealth. Brown wealth is only 12% of white wealth. This is largely due to the fact that home ownership access has been far less because of redlining, and that problem has persisted. I mean, the numbers are the same as they were in the late 1968. And in fact, over the last year, due to the pandemic, the actual ratio has gotten worse. According to some reports, Black wealth is now, as low as 7% of white wealth. And then on the other side, income is still about half of white income. So there's an income problem as well as a wealth problem in America.
Are the unbanked and underbanked markets still growing? And if so, why?
Unfortunately, they are still growing. And to some extent, there's a couple of big issues within these communities. One, they've become much more of banking deserts for the lack of ATM machines and, the branches and that type of thing. The other key reason among these communities, they have a far lower degree of trust because of historical reasons. And the third reason that we're discovering is there's something called KYC, or Know Your Customer, in order to get a bank account. And because of the relative instability of housing, jobs, and employment, they don't necessarily have the credentials that allow them to immediately get a bank account. And because their balances are lower, they end up, that creates even a bigger problem. They either can't get an account, or they don't trust it, or they get fearful, and the credit goes down. So all these things contribute to this problem, which, of course, with COVID and the drop in employment, it's only gotten worse.
So where does Paybby fit into the ecosystem, and what solutions are you looking to provide? So
what we do is that we offer, we're a Black-owned fintech with the only operating mobile-only banking account, where you can get a spending account and a savings account purely on your mobile phone. So within a matter of a few minutes, you can get a fully operational bank account. So what does that do? Well, one thing that it does is that you could be anywhere in the U.S., anywhere in all 50 states, you can get a bank account with us. So the dependence on geography is not there anymore. So we're solving that problem of access to banking. And of course, in this country, well over 90% of the people, even among the poorest or the most excluded communities, tend to have a phone now, and they're all smartphones. So we provide access like that hasn't been possible under traditional banking.
Well, with Paybby, though, KYC is still going to be an issue. I mean, that's just regulation, though. I mean, you still require KYC. Is that correct?
That's a great question. So we discovered, Paybby was started about a year ago, right after George Floyd. And then I started a company, I started hiring engineers, but then we were fortunate enough to buy Wicket, which was an operating existing bank account that we acquired on Martin Luther King Day this year. When we started it, we discovered what you suggested, that KYC was a problem. But there is a gap where you can meet regulators with thinner credit files. It's just a lot of the KYC that the regulators and the banks have been using have been more exclusionary. So we've been working with our engineering and our team to tune KYC and other things that will meet the concerns of the bank, but yet will qualify a lot higher percentage of these communities. So that problem can be solved, and that's something that we're bringing to the table that hasn't been available before.
Got it. Thank you for that explanation. Why do you think neobanks are the future and will replace traditional retail banking?
So traditional retail banking, the whole concept of banking in the past was you go to a bank, you get money, you put it in the bank account, you need to send money somewhere, you use your checking account, and you just send a check or you just, wire it or whatever. That has all changed with fintech. There's a couple things that are happening. One, you can integrate payment systems, you can integrate applications all on, say, in our case, with your mobile phones, with the APIs, or application programming interfaces. So the idea of technology substantially changed everything in terms of the integration of what I call the flow of money and all the things in which you use money. That's one thing. The second thing is what I would call artificial intelligence and machine learning, which we're a big part of, is that now all the data that becomes possible, and we can use that data to add intelligence into how consumers can get access to financial services and make better use of financial services. That is in fact a huge part of what we're about. Is helping our consumers do things that helping them with their own money. And for example, there's a big area called financial literacy, and that is historically financial literacy, which is important. Is you get educated, you go to school, you read books. I get books all the time on it. We believe that with machine learning, artificial intelligence, you can bring a lot of what I call financial management to the people. They don't need to do that. In our case, we have a smart banking app. It automatically categorizes your spending. It tells you how you're spending money. It will tell you if you've overspent it, say Starbucks. We have automatic savings that automatically puts in your savings account, and it can be based on whatever your budget is or intelligence. So I believe that a lot of financial literacy moves from financial literacy to financial intelligence to smart management and smart banking. And that's why traditional banking is challenged compared to these new fintech-oriented banking services.
All right, glad that you brought up financial literacy. That's certainly the way to break the cycle and plan better going forward. Hassan, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you. Happy to be here.